now we want to bring you an analysis of those breaking inventory numbers we brought you in the oil space at around 10:30. So we want to now sift through those figures, tell you how the factors affecting the price of oil these days are playing out in the marketplace. Edward Meir is a commodity analyst at MF Global. He joins us now live. Edward, we ran through the numbers here. We are seeing a spike here in crude oil. How much attention are you paying these days to these government figures?
I'm not paying that much attention. The numbers were kind of mixed, not much of a surprise in either of the categories. I think the oil markets are still really following the dollar, still very much preoccupied with what the Fed is going to say today in terms of their policy statement and if there's any significant change in their wording.
Mm-hmm. Well, this was an unexpected decline, though, in the crude space. So yeah, it does seem like there's some fundamental factor in the price movement.
Yeah. What's been happening is the crude component has been tending to decline usually in the last few weeks, but the market seems to be paying more attention to the products. And they've been, you know, there's been no pressure on the products. They're either declining less than expected or actually building in many cases. So it's the product side that I think is really driving sentiment when, in fact, people do look at the numbers.
Mm-hmm. You think that OPEC is way overproducing by about 63%?
Yes, that's correct, yes.
So why isn't that factoring into the market? This is just dollar weakness and inflation hedging?
Well, that's a question you can ask for all these commodities. You've had huge runs in oil, in copper, in precious metals, and yet the fundamentals in all three are not, you know, not screamingly bullish. Mm-hmm. So you are getting sort of the investment component, people who are worried about all this stimulus coming out, right, looking for inflation hedges and, you know, moving into these markets. Of course, they're very easy to buy as well with all the ETFs around.
Right. More speculation, or at least more participants in the market right now. How do you position yourself ahead of the Fed decision or lack of decision, at least the Fed announcement that's coming down at 2 p.m. today?
Well, if there's a significant change in the wording, in other words, they have this phrase, staying accommodative for an extended period of time. If they tamper with that, I think the dollar could really rally and we could see some pressure on commodities. On the other hand, if they maintain their accommodative stance, which is what we expect, with really no change right now, I think it's too early. The dollar, I think, will be under pressure, and we could see a pretty good run in all the metals going into the end of the week.
How much of a corollary is there between what we see happening in the gold space and what we see happening in oil? Because some of the moves that we saw yesterday in the oil space were attributed to that buying on behalf of the Indian government.
Right. Gold had a big spike, as you mentioned yesterday. The Indians bought 200 tons from the IMF. That kind of lifted all the commodities higher. And yesterday was a bit of an anomaly because the dollar was strengthening, and yet all the commodities moved higher. The correlation is not that great from what I recall. You know, the oil-gold correlation. Gold has held up pretty well over the past year, despite all the trauma we've seen in the other commodities, and that's because people are genuinely worried about the purchasing power of the paper currencies and are moving into gold despite very sluggish jewelry demand.
Well, what's a fair value for the price of oil right now? Where should it be if not at 80 as it is now?
Trading range for the balance of this year, I think, will be between 65 and 90. 90, we could get there on a big spike. Next year, I don't think we'll have much of a run. I'm particularly concerned with the fact that there's a lot of supply out there. There's a chance people might get tired of feeding money into sort of the inflation plays. After a while, you do have your exposure, so you may stop. So I'm not sure how much of a push higher we'll have next year.
All right. Thank you so much, Edward Meir, for joining us for your reaction to those oil inventory figures.